Good morning, everyone. BC Richfield here, coming to you live from London a little bit earlier today at 10 o'clock UTC, making it 1100 here in London. A big shout out to everybody joining the stream with us today. Victor, see you already in the chat there, my friend, as well as a lot of other people. Just going to give people a couple of minutes here to start coming in. Several hundred people coming in across the different platforms. Always makes me smile on a Monday morning getting to be here with you all. I hope you all had a fantastic weekend. We're going to, as we typically do on a Monday, keep our focus on Bitcoin. But obviously, if there's any other particular areas of interest and we get time on the stream, then we'll certainly look at a few others as well. So what I wanted to do was every Sunday, I have the pleasure of writing the Bitcoin report for our members over at the Bird Nest. Now, I actually really love doing it on a Sunday because it allows me, I typically don't trade the weekends, Saturday and Sunday. I'm very much kind of traditional market trader. I do trade crypto, obviously. But I try and apply those same rules because for me, I go very, very hard in the week. And there at the weekend, I like to have that separation and that downtime. People are very, very different. Obviously, in this industry, it's quite hard to get that kind of space. But the great advantage of doing the Bitcoin report on a Sunday is that it gives you that lovely overview of the market before traditional markets open on a Monday morning and we see that injection of volatility come in. So I just wanted to leave this trade up here as a trade that we kind of planned out over the weekend. Okay, so just want to say why I shared the information I shared, why this premise came up, why I was targeting this level, to give you guys like a little bit of insight really into how I'm establishing this bias. And maybe it's something that, gives you guys something that you can go away with. And obviously, if you've got any questions, then please do let me know. But I really just wanted to start as well by reminding everyone that we've currently got our Discord open for free. There should be some information in the link below. We've got this lovely little banner up here at the moment. We've got just such a wonderful community over there, right? We've taken in a few thousand new members recently. We've opened everything up for nothing. You get it for up to 60 days. There's no catch in there. It's just our way of trying to get people back in. The Nest is running, I think at the moment, around about 79% success rate on our calls. We publish all of those calls live for all of our members, and they're all available. The P&L is available every week, every month for you guys to check. There's loads of amazing trading courses from our wonderful team, as well as obviously the community, which is a really, really huge part of this. So if you are out there and there's somewhere that you want to come and learn, you want to be part of that kind of community, please do check that out. If there's anything wrong with the link in the description, you should just see a link through to the Discord. And it's literally as simple as that. You don't need to give us any details. There's no auto renew nonsense or anything like that. You just get access. So if that is of interest and you can't find that, please do let me know and we'll share something in the chat. Good morning, Erica and Seb as well. Apologies for any of you saying good morning, by the way, that maybe I'm not seeing you come up in the chat. We get kind of a limited chat thing come through here because we're streaming across multiple platforms. So without further ado, let's look back on this. So one of my favorite liquidity pools, and obviously these are technically a little bit less important of a weekend, more of a traditional market technique that I learned a long time ago, is looking at Asia, right? Asia's consolidation range. It doesn't always have to be a consolidation range, but typically, Asia does consolidate, but it leaves really, really good liquidity pools on the highs and the lows. So when we kind of took this out here, we took a local high here as well. Then really the key thing here was looking for some momentum, was looking for some impetus, for want of a better term, to the downside, right? So what we got here was this beautiful breaker line entry, all right, that allowed us to wait for this move, wait for the sweep, yeah, and then wait for this breakdown, wait for the momentum to take the market down. You can see gave us a lovely retest over here, or we could have got an entry here off of the inversion, or even a kind of breaker entry here as well. So although there's a lot of different ways to enter, I just wanted to kind of backwards rationalize this for anybody really that's interested, to see how we kind of come to that conclusion. So to do that, I'm going to start by going and looking at the daily. Okay, so what I'm going to do is just pop these bits away over here. And just create these as a group, right? Then what we're going to do is we're going to pop ourselves back onto here. And we can take a look at that at the end. Now, the key thing for me when I'm looking at price action, right? Yes, I am always looking at points of support and resistance, and I will definitely look at the weekly as well. So as we zoom out here, lots and lots of old data looking at all that stacked support that we had down here when everybody was really, really kind of super bearish coming into that anyway. Always good to kind of look over the old bits and pieces on the charts. But here on the weekly, the key thing for me that made me really kind of look at this in, you know, a higher time frame, kind of bullish to neutral area, is the fact that we've got this bullish gap that we're holding here. Not just that, we can see when we dove into this gap last time, we can see what happened. Right, we swept liquidity below that low. Powerful liquidity pulls when you see lows or highs resting within gaps. Price swept that, moved higher. We then came back down again, and then we had this slither of the gap remaining here, for which we created another swing low. Then when we swept that, we had that really kind of strong reaction to the upside. I really like the look of that downside wick there, right? Really, really, really showing a lot of buyers stepped in at this level, and we almost completely rebalanced this lower gap as well. Now, obviously, we have to wait a long time, you know, on the weekly chart. We also want to be aware that we've got this bearish gap above us, yeah? So really, my initial thought when we saw this reaction was that price was going to kind of draw towards this, but actually price showed a fair bit of weakness here. We closed out last week as this doji candle, okay? So I'm just going to clean that up for a second, and then I just want us to focus on this doji, okay? So a doji candle here is typically you get this kind of small body here. It looks a little bit like a spinning top, right? That you used to twizzle on the table, which is also a candle, right? So I don't need to get confused with that. But we're looking for almost equidistant wicks high to the low, and then a small body in the middle, yeah? So this would be a good example. This would be another good example. This would be a good example here as well. Even this really, although the body is a little bit larger. Now, the key thing with these, when you spot them in trends, and if we go all the way back to here, just for example, right, so that we know we're not cherry picking anything, then what you notice is when you have these expansions, yeah, so price is in a bullish state of delivery here, higher highs, higher low, bullish market structure. Now, when we set this higher, for an example here, and price starts to cool off, notice how here you start to see these doji candles. They give you a signal of indecision in the market, right? Or that price could be heading into a small consolidation or corrective phase. You then see price start to correct down here. And although we don't get a perfect one here, you can see these kind of candles here. This one I treat much more as kind of like a pin bar. This is the one I'm talking about here. Right, pin bar with a relatively long nose there, almost a doji, but not quite. You see the doji kind of come into play here. And it just shows you then that, you know, that corrective move could be coming to an end. And then we always favor realigning ourselves with the main trend. Yeah, so the trend is up. So you see these kind of candles. And then what you're doing is I'm then going to the charts and saying, okay, see this doji candle here. What am I then looking for? Well, I'm looking for a liquidity sweep. And then in this case, we can see here, we get this bullish gap with a low in it. We start setting the doji candle here, so we're aware of it. We then want to see some engagement with the liquidity, which we see here. We get a bullish pin bar candle. Ultimately, price then comes up to start attacking liquidity above that high. Good morning, Nick. Hello, mate. Yeah, sorry. Catching you all out with a little bit of an earlier time. We'll be back to normal again next week. And then the same thing here, right? We then get this expansion up here and we start to see these doji candles come into play here, and ultimately price goes into a corrective phase. Corrective phase, we can start to see the doji candles in here and here. It doesn't just mean if we see a doji candle, we think, oh, okay, price is going to start jumping back along with the trend. But again, doji candle here, right? And then look, when you see them in these corrective phases, I'm kind of looking at them to say, okay, well, what's happened here? Well, if price has had this corrective move, we had this move up, got the doji candle, and then everything kind of came back down. Then we've had this pump, doji candle here, though a little bit of a long wick there. But then as we come down, we've started to get these again here. Now, we have swept some really key liquidity here, as we just covered. So at the moment, I'm kind of a little bit undecided. One thing that we have got, and I'm not really going to cover it too much in this stream, but can do in others, is that we've also formed a weekly inside bar pattern here. Okay, so an inside bar pattern is when you get a large body, a large candle like this, or any size candle, as long as the second candle is high and low is within the range of the first candle. So, you know, if you're ever unsure of that, if you can't see it for whatever reason, you can just draw a box over the candle and say, okay, does this candle in any way violate the high or the low? No, it doesn't. What this does is it gives us two ranges. Good morning, Craigie boy. How are we doing? Simon as well. Give us some opium for the bull run. Love that. Well, I just think at the moment it's one of those situations, and we're going to cover this, right? But show why timeframes are so very important. But I do love to trade the inside bar pattern, and I do really like this one. So I'm very interested to see what price does at any of the range extremes. Yeah, so any of the range highs or any of the range lows. And like all ranges, we would trade them, we look for deviations for price to either step back in the range or to step out. But I think I'll cover that at a later point. Also, guys, if you have got any interest in that, please, you can find a post pinned to the top of my Twitter about inside bar patterns and how to trade them. You can also find this kind of information over at our Discord and on our website, which, as I said, is all now available to join for free. So there should be a link in the chat. I've just popped it up on the screen. If anybody's got any issues or, is not able to access it for whatever reason, do just let us know, and then we'll make sure that you can get access. Like I say, we've opened that up for 60 days. So, the sooner you get in, the more that you can get the value out of that. And there really are no strings attached. Now, before I rant on too much, what am I looking for here? Well, actually, two indecisive weak closes here. Yeah, meaning that, and SE taught me this more than anyone, small body candles, lead to big body candles. Small, bigger, right? So now we're looking at this, we're almost in a consolidation phase. Now, I actually got a much more, I love that. So the Craigie boy, there is your hopium. That's it, guys. Come and join us over there. We've got several thousand people in a really vibrant community. People that all want to learn, very respectful, and some really great information for you all. So please do come and take advantage of it. So on a daily scale, what are we doing? Well, I actually thought I had a pretty clear read on this before. Price hasn't really broken down in the way that I thought it would, right? So here, apologies, here we have a bullish gap. Price came up with this beautiful expansion candle back here on the 8th of August. And then price came down into this level here. And we're looking for these to hold and then push price up. If I see a close between these gaps, below them, then they invert. And I'm looking at that in terms of like a support and resistance flip. Now price is kind of consolidating here a little bit, right? Because we close below this here, I'm very interested to see if we go lower, because that ultimately is how I look at the market. And look, not just that, lower low, lower high. Looks like we're setting a lower low here. So, ultimately on a daily scale, I have to be bearish here. The other thing that I can do as well, is I can put on my B Pro and then take a look at that, and B Pro here quite clearly tells us, right? We had the little bullish trigger, but we got no confirmation here. After this expansion, it's kept us bearish. We're holding under the moving average. And if I just go on here quickly as well, what I want to do is just pop the higher time frame trailer on here, which is a really handy piece of kit. Okay, and we can see that we've got a support level down here. So maybe price is looking to purge a little bit lower, maybe down to this low, and then we can start to see a run higher. So what does that mean overall? Well, actually, it's not really the cleanest read at the moment. I'll tell you for why. We came up and we took out these equal highs. That's a really key liquidity pull for me. So we were expecting a rejection down here as we went into the weekend, and we got it yesterday, which we covered on the show and also in the Bitcoin report, which is all of this again free for members. Hey, morning Burned. How are we doing, my friend? So I'm bearish on a daily scale purely because we're holding this inversion, right? If we close a body above it, which we haven't done, we haven't done that. This is the body that closed below, giving us that continuation bias. Then quite simply, if I wanted to see price move higher, I would need to see this closed above the purple box. And also I would really want to see some down close candles closed above, showing us that we can sit there and we can create that order block. Ultimately, if we want further confirmation for the way down, then we're looking at this one here, the down close candles close below them. And then, the probability in my eyes that we come down to take out this low increases greatly. Chrissy baby, my dear friend and wonderful FA analyst over at the Bird Nest. BC, if you get on, don't forget, update provided this morning on Discord. Yes, okay, really good point. Actually, let me see if I can just quickly grab that, Chris, because I do think that's going to be some good value for members. Let's see. Let me dig that out in our wonderful market analyst channel. Yeah, beautiful, beautiful work. So something I think we will actually just take a little look at here, guys, is we will just take a little look at Atom. Okay, so Chris, who's our fundamental analyst over at the Bird Nest, I've been talking about keeping an eye on Atom, okay, for shorting opportunities. And the reason for that is major pending undelegations going through the network at the moment, with 2 million Atom being liquid on August 21st, 1.5 million on August 25th, 1.5 million on September 3rd, and 7.5 million on September 5th. According to CMC, the average daily trading volume at the moment is 14.7 million on Atom. So if these undelegations become sell orders, it will have a market impact. He then goes on to cover this in a lot more detail. What I would recommend, guys, is if this is of interest to you, and it really, really should be, because there's opportunities here in terms of the calls, there's opportunities in terms of looking through the analytics and Chris's wonderful FA view on that and how we get to these conclusions as a trading team. Just click on the link, right? Come over, join the Discord for free, no trial, no catch, no sign up. We don't ask you for future commitment, anything like that. Just want people to come and just enjoy this community while we have the opportunity, our way to kind of give something back while the market's correcting, and we can all use this time to better ourselves. So thanks a lot for that, Chris. And absolutely, you know what? We will take a look at Atom today as well, so that we can really kind of make the most of that. So just kind of looking here on Bitcoin at the moment. So I'm just going to get rid of the order block line, because we're in a state of bearish delivery. We're in bearish market structure. Ultimately, while we hold bearish levels or we see sweeps of a bearish nature, that's the point that you want to start getting involved. Yeah. So when I see these equal highs here, and price come and took this yesterday, it was a real kind of no-brainer for me. But the 4 hour was really the key here. Okay. So the reason that the 4 hour was key, let me just get rid of that for a moment as well, is we took out these equal highs here, but we had this beautiful delivery from this bearish gap. Okay. So that for me really just summarized everything. We'd had this drawback. We'd set this almost engineered liquidity with these equal highs resting there. We then also got a local sweep. Yeah. So price took out this high here, which was the high of day on Sunday. So then ultimately, as we then step into the charts, just think about what you're telling yourself. When I think of all the people that I've trained over the years and the people that we work with and that we train at TBN, is that clarity around focus of bias. Yeah, because if you're stepping onto the charts every day, not really knowing where it goes and just looking for patterns, or you've got that kind of lack of clarity, then it stops you or it hinders your execution. For me, and that's why I don't do this on my actual charts now, but I would recommend people do it, especially if you're looking at things like gaps. The other thing as well is we have this balanced price range here too. You see them in a lighter purple on my charts. What's that? Just means we had this bullish gap close through with a bearish gap, meaning that this was just not respected at all. It was just absolutely blitzed through, telling me that this is another area where these two gaps cross over, that we can expect resistance. So we can see we've got stacked resistance. We can see we're getting our triggers. The daily is telling us we've taken equal highs. We're delivering from bearish gaps, and we're sweeping, we're sweeping the highs. These are the key areas to get involved, right? And then, in terms of looking to execute, like I said, I'm not really going to go over executions in this stream, but if you do this with your chart and you make these kind of, red or negative colors, if you want, when you're associating that and you're watching this price action develop, because you get caught on the lower time frames here, right? And a lot of people will be induced into being bullish, right? And then the real just kicker for me here, and let me just overlay this as well. You can see exactly the same things coming up on this chart, right? We had equal lows down here as our target, and look at this. Asia high, which was also equal lows on a lower time frame. So you can just see how you can piece these things together, but it's really, really important to have that higher time frame, view on the markets. So, right, great, nice jabbering on BC. Thanks very much for that. But where does that kind of leave us at the moment? Well, for me, let me just go back to the 4 hour. And let's just get all of that stuck in there for a second, and we'll deal with that later. Now, in my opinion, the markets move there based on liquidity. Yeah. So if we, look at key kind of pivot points and levels, So something I'm always doing here is if I see something like this where there's an area, especially a long downside wick where we've clearly found some kind of support, then what I like to do is just put a horizontal line on that. Yeah, so you can get that on your toolbar, and it just puts it across the whole screen. Now you kind of start to see, and then as you go back, you can say, okay, actually, you can see previous engagement at this level. Yeah, price came up, initially saw a rejection here, closed above it, didn't quite get the retest, but then ran hot. Also, price very rarely is, these kind of exact lines. It's much more kind of an area. But the key thing is, even if you made an allowance for, say, this, where you see the flip, then as you move forward, you can see the interactions that these lines have. However, I'm just looking at it more for kind of what I would call a pivot point in the market, or a typical support and resistance flip. Why would I choose this line? Well, price clearly found strong support there, led to buyers stepping in. Then what happened? If we zoom in a little bit, we can see quite clearly price closed beneath, retest. Look at these long side wicks coming up. It can't get above it. Rejection. What do we get here? Price comes above, deviation comes underneath. Then in a really sneaky move, price gets back above here, inducing longs, only to come down. So price came up, took out this high, right? So you've got this nice kind of structure starting to build down, people starting to get bullish. Ultimately, the price then came down to take out liquidity below that low here. Yeah, inducing shorts again before the big catalyst led to this pump higher. A good way that I've always kind of looked at this, and I've learned a lot from SC over the years, people like Trader Dank as well did a great inflation, and Dante, when you're looking at these kind of engagements around these key levels, is look for these kind of areas to be established. Yeah, so price kind of gets up here. Now, I wouldn't really have any issue people looking for longs here because we came up, took this higher, came back down, but I do like seeing closes above these levels. Yeah, so that high there, look what happens. We get that strong close above, all right, and then price in here tells you where you can be a buyer, depending on the time frame that you're trading on. It also tells you where you can have your risk, okay, based on the previous swing lows. So using that kind of principle and kind of moving that forward to where we are, we can see price is kind of at an interesting place here. We had this big sell-off and this area was just absolutely ripped through. But then we came through it aggressively here as well, right? And then we held it as support here. Deviation here, price got back above, and now it's back down at this level here. Now, the one thing that I would say, is price had this bounce here. Yeah, this bounce got a little bit lower. That one looked a little bit better, but then lower again. And ultimately this one here isn't looking particularly great either. So you can see the energy in the moves is starting to wane. So what does that mean in terms of where I'm looking? So I'm just saying to myself at the moment, look, if I'm bearish, then ultimately I'm bearish. And if I'm bearish, then I'm favoring short positions, not just from anywhere, but that is what my bias is. So I'm going to go on here and say, okay, well, let's draw these in as some downside targets here, because if we want to know, then, we still need targets to aim for. We want our liquidity targets to be made on the higher time frame because we believe that's where the larger players in the market, and that's the time frames they're utilizing. So this, for me, is the kind of line in the sand. We've got a bearish gap here. I think in terms of expectations, we would need to see a strong and quick reaction from the fact that price has swept this low. So why do I say that? Let me just make this another color, actually. I'm just going to do this I'm going to do it in black, actually. Make that a bit larger. So we've swept this low now. So I always want to see, if I want price to go higher, I want to see us take out a low so that we've induced some liquidity, right? We've taken out some stops. That gives a nice liquidity pool to fill bids, and then price can move higher. However, there is another kind of little bit here as well. I don't like overcomplicating the charts, but I do feel like this is kind of, bearish gap here. Price closed above this, inverting this gap with a really, really strong move. We've got an order block in here as well. We can see price finding support at this kind of area. So I'm still watching this as an area. Ultimately, if we close below this and don't take out this low, I'm heavily invested in price going to at least that low. It's just another little extra bit of confluence. However, this, for me, from a bullish perspective, now we've taken out this low, I want to see one of two things. Yeah, so I either want to see us take out this low, as we've done, and then have a strong move above here, closing above this, then I'm targeting this higher and higher, okay? Or I want to see price continue down and maybe take out this low, yeah, that could be a really good catalyst for price to go up. But one thing I would say is we could absolutely see a reaction at this low here or this one, and a case where price comes to rebalance this gap here. Remember, while we're in these, we're bearish. It's what led us to that bias for the short trade yesterday, and ultimately what we trade weekly over at the Bird Nest. And then we could do something like that. I'm not saying we're going to, but I'm saying that that's the most probable, in my opinion, unless we get a close, a bullish close on a 4-hour scale above this. So that's what I'm watching at the moment. I don't think I'm really going to kind of draw down into lower time frames than that, purely because this for me is so very clean. And, you know, ultimately we played our hand quite early on this one as well in terms to the downside. If you're really somebody that's looking at this from an intraday basis, one thing I do really like, to give you a little insight to how I trade, how we trade over there with Trade Club, which is our kind of, we do it 3 days a week as a group. We trade the morning session for New York, which is like kind of early afternoon. So it's 1:30 start for me here in London, or 12:30 UTC. So, you know, these 15-minute gaps, when you see a big gap like this, and that is what I would call a big, clear and obvious gap, then this is where I would be looking to get onto some short trades. Price drawing down to these lows here. Ultimately, we close above here, and we can see we have these smooth highs here. So maybe we get a run above, but it is going to be quite difficult at the moment in terms of calling these, because, you know, we are obviously quite low. So probably see some kind of reaction. You know, this is a very big gap. So by the time we're above this, you'd really need to be on some low time frames to take some longs into this. And when you're in there, it then becomes quite treacherous. So henceforth, why I really like the look of this on the 4-hour, just gives us a really clean state of play. Now we're going to put this same analysis over on to Atom as well, and see if we can align that with what Chris is telling us from a fundamental point of view as well. Hey, Gordon, how you doing, my friend? From Bedford. Great to see you again, mate. Right, so let me take a sip of tea very quickly and look at Burns' question here. Right, seasonality-wise, BTC is down from week 34 till 40, and then up and up, both 5-year average and all-time average. Absolutely, and there are very few people better at understanding these seasonality reports than Crypto Burb himself. I assume that you guys are probably, most of you are following him anyway, and if you're not, I would really recommend it. There's very few people providing more value for free in this space than him, and there are very few people more knowledgeable either. You know, opinions are like a certain part of the body that I can't say because it's before the watershed, and everybody has them. But if we base it on the facts, he's a CMT, chartered market technician level 3, somebody I've learned an incredible amount of over the years, and was, you know, approached by the people that write the, you know, the stock market almanac. You need to go and look at what that is, by the way. This thing, the study of seasonality patterning in traditional markets, was a huge turning point. And the creators of that approached Adrian about the study of that on cryptocurrency, right? So there's some brilliant information. You can find it all over on Crypto Burb's Twitter. And again, just, you know, pop yourself through on the link. You get access to all this stuff on the Discord. So it would be great to see more of you over there with us. Please do feel free to come in and make the most of it. Leave that up there for a second for anybody that's got the not got the link, but you can find it in the chat if you can't access it on that comment. Uluhazy Melogo, my friend, how are you doing? And Zena crypto update, Binance codes. Yeah, a strategic partner of Binance. We have been for a long time. Obviously a brilliant exchange. And again, look, we're also partnered with some other amazing exchanges like, you know, Bybit, Blowfin, other people who have come in with us as well. Certain countries have restrictions. Other places are better than others. So the whole idea is we get to offer kind of like a good wraparound for anybody to be able to use them. Because very sadly, I'm not able to use certain ones here in the UK, for example, because London politicians have their head somewhere that, again, I won't mention this time of day, but I think we all know where the gist is. So thank you for that, Zena. Yeah, absolutely. And again, the codes for all of those discounts and some amazing exchanges you can trade, but it doesn't cost you a penny. You can find them all down in the description. Okay, so let's take a look at Atom, shall we? So what are we doing here? I mean, we can see here again, you know, we've just been riding this one down at the moment. waiting for these bearish gaps to develop. Price has just been delivering, you don't want to say that, almost perfectly, right? Just going to draw these in for you here and show you just all the opportunities that we've been having. All right, we then see this one come in here. We failed to really displace under here, and ultimately this then became an inversion gap when we closed above it here. However, thanks to the news and the fundamental insights we've had here from Chris, we can see price coming back down into this quite aggressively. And again, I think on a 4-hour scale, I will move to a higher time frame in a moment as well, guys. But from a 4-hour scale, we start closing below this here, and my eyes are firmly fixed down here at 4.429. To start with, this is much more looking at an intra-week, maybe even an intraday scale. Okay, so let's zoom out. And let's just take a look at these. Let's just get this all cleared up a little bit for us. Just some really old school SR levels. Again, these kind of key pivot points that we're looking for in the market. But I don't want these to be a distraction here. Very easy. Just save them in an old group somewhere. Or we just draw them again, right? Always good to kind of put yourself on a naked chart, I think. But what I do want to do is just kind of hide these for a moment. We'll just label that up as 1 because we can pop back to that in a minute. The idea for me with starting with a clean chart is you remove any bias that you've built up. You've removed any of that. All that's in my mind now is looking at this from a perspective of where do I expect price to react, or where do I think price is reaching for? Yeah, where has it most recently been? We've swept that low here, which was actually beautiful, equal lows as well. Just draw that back to here. Look at those. Absolutely just spot on, that low and that low there. Amazing liquidity targets when you see them. So on a weekly scale, we can see that there's definitely potential for more downside. I'll tell you another level I really like is this. I'll tell you as for why, because I'll draw these back a little bit actually so you can see them on the lower time frames. This one down here at 3.288 is, again, it's a low with a long tail wick, which I really like, as is this one. And these two both rebalance gaps, right? Showing us that, again, there's that cluster of liquidity. There's other kind of areas where we can get extra confluence, and confluence in this game is often king. So what have we got? Well, we've got this big bearish gap above us on a weekly scale. Maybe we don't even come back and retest this. Remember, with some kind of negative fundamental news attached with the fact that we're clearly delivering bearishly, just means that this could really start to kind of take a look at this here as well. So please do kind of keep an eye on that too. But at the moment, if we get something like this, then boom, great to tie that in with the fundamental, information that Chris has shared, and think if we're in there, then we're looking for shorts. We close above it, maybe we move a bit higher for this, really do that cruel thing the market does where it induces people into that, bullish mindset, and then ultimately takes all of their orders and uses that to fill the asks or the shorts on the other side of the market, and the market just absolutely pummels. Meme Queen, my lovely friend, and our leveraged Queenie over here. Wonderful little traders. So hello, my dear, for the week of August 19th to the 23rd. We have Web Summit 2024. Fifth joint international conference on AI, big data and blockchain. That's brilliant bit of insight there again from our wonderful meme queen. Thank you so much for sharing that as well. And this is something that I'm really, really big on here as well. And this is, red folder news. We've got Fed speakers coming in here as well. We've got jobless claims this week. We've got Powell speaking on the 23rd. All major catalysts for the market, and actually really wonderful of you to share that. And just before I kind of continue on, this is something that we always cover with members, right? Is what the news is doing, because ultimately the news has far reaching effect on traditional markets, which ultimately then, as much as the big old degens might not want you to think so, this definitely has an effect to liquidity that can then come into really heavy risk assets like cryptocurrency. So let me just share this with you quickly, right? And this is very much thanks to our lovely meme queen here as well for bringing this all to our attention. Again, something that we share within the nest, but really do love this insight into this. These big Web3 summits and stuff like that tend to generate a lot of interest, gain a lot of exposure. So we could really see this as a potential catalyst. But on the news front, Yeah, this is looking at red folder news, and we can see here that we've got nothing today. These are just key core news announcements and we focus on the US market being the biggest market, the market that moves the dial the most. So the big one here, right, is Wednesday, FOMC meeting minutes, 7 p.m. This is huge. And I really, really mean that, huge. Powell will take the mic here, and this thing has the ability to move the dial tremendously. There's a lot of talk of the US potentially cutting 50 basis points, at the next rate meeting, and that would just be massive. If that happened, I think they could really light a fire under this market. It shows that inflation is easing. It shows that the numbers are coming down much more in line with where they want. And that typically means that there's more money in people's pocket. We saw it last week where we had the positive prints showing that retail sales were up a lot, right? Now, that combined itself on the fact that we had low unemployment claims, which we can see here we've got to deal with on Thursday, all right, as well as flash manufacturing and flash services PMI. Okay, all of these things, what they do is they give you insight into what's happening in the world, especially in America here. Does the average person have more money in their pocket? If they do, they're much more likely to invest it, and they're much more likely to invest it in risk. This is why we saw over the period of quantitative easing that we got post-COVID, when people were being paid out. We saw all of that, and we got it. We saw the pumps, and we saw that big move in the market, right? That's because the people have cash readily more available. They're willing to speculate with it a lot more. Now, the problem is when you get quantitative tightening, or you get, as we are at the moment in a series of high inflation, interest rates are very high, people have less money to spend, okay? So the market at the moment is in this state of compression, even though we've seen tremendous gains in equity markets. We're now looking at a point where we're like, okay, if this thing really starts to settle and there really is a genuine feeling that this has stabilized and we've got this kind of platform to build on, that's when we're going to see risk really kick off. So thank you so much for that, our lovely meme queen, for sharing that. That is absolutely wonderful. So now back to Atom. On a weekly scale, really, really simple for me here. We've taken out these equal lows now, and I really would expect price to draw back towards this gap. So often when we see with price, just give you a nice recent example here, even on a weekly scale, we come in and we take some liquidity here from like this low, for example, also from this low. We set this gap here. What happens? Price draws back in, to rebalance this gap. Think of these gaps as kind of a point of decision making, And what you're saying is, I typically watch the equilibrium, so the 50% of these gaps. And what I'm saying to myself here is, okay, if I draw 50% on here, how's price reacting? We draw back into this here. I'm ultimately always looking for shorts here, unless we start closing above the halfway, and ultimately until we close above it. When we then close above it, especially, that then inverts and we move the other way, okay? So that's what we're kind of looking for here. However, obviously price, sometimes there can be too many catalysts. Price doesn't always have to do this. We can see here we took a low, right? And okay, we created, a very skinny gap here and a very skinny gap here as well. But ultimately price was just too heavy. Just kept kind of going down. So, with those news catalysts that Chris brings to our attention here with Atom, then, we've got our pre-made targets lower down, and I'd also include this one in the mix. So as we look below us, we can see the liquidity really, really drawing price. So how does this play out on a daily scale? Well, on a daily scale, we can see that we are doing what we looked for previously, right? We're now delivering from this bearish gap. On a daily scale, we've got an immediate swing low below us. So now we're saying, okay, well, we need to also be aware of this gap above. So this kind of hinders us in any terms of getting into an early stage bullish recovery. Because again, just because we see a bullish reaction doesn't mean that market's going to go bullish overall. As we know, even on a daily scale, we're setting lower lows, lower highs. As we are on a weekly scale, we are bearish, right? But I like this liquidity target above here in the form of equal highs. And I'm also always asking myself, where's max pain in the market? If everybody's starting to see this and feel that this is short at the moment, then the truth is that, the market play for people with the, ability and the wealth and the clout to move these would probably be to say, well, if the obvious play is to go for here and then straight down, let's make people believe we're going up. Really take some key liquidity from people that are shorting here, get that big short squeeze in, you know, we come back above here, we see this market structure shift at this point, okay, or actually a break because we've got a lower low, lower high, but this is a higher low. This move up would set a higher high, and everyone's then saying, wow, bullish market structure's back, let's go, only for price to ultimately do that and be reacting, remember, as we zoom out, from our higher time frame, gap. So, you know, we don't know what's going to play out, but it's really important to consider these different factors and give ourselves triggers. So you might say, okay, BC, well, that's all great. So what are the triggers? Quite simply, as we hold below these gaps, I remain bearish. If we get above these gaps, then if we close above here, then my target becomes immediately these equal highs. And then I would expect price to drive in and have the decision made within this weekly gap above here. So on a 4-hour scale, how does that kind of play into our thinking here? Well, as we can see, if we're looking for prices to the downside here, well, quite simply, we're delivering from this bearish gap. We want to be a little bit careful because we have come in and run this low. Yeah, so we can see this one here. So this was the low of day at the point. And now we're just delivering from this. But as we look at the chart here, this is why it can be useful sometimes to do these gaps in red if they're bearish and green if they're bullish. You look above you and you just think, crikey, you know, there is a lot of resistance ahead. Yeah, we would need to be cautious in terms of this, but you know, obviously if we close above this on a 4-hour scale, you know, based on the rules of liquidity that I certainly trade by, then I'm looking at this high at 4.715 to be targeted. But as long as we remain below this, then I'm really feeling that we're, you know, continuing to be bearish here on Atom. And if we want to take this down to kind of an execution-based time frame, we can see again, we can draw over another bearish gap on the top of this. And you can see as you move from the weekly to the daily to the 4-hour to the 15-minute, you just see this stack of liquidity building up. Coin Master, welcome, very much welcome to the stream. I don't really make long-term predictions, my friend. I think it's very, very, very difficult to do stuff like that. I'm sure there's other people who are better placed than I am. I typically look at price from a liquidity perspective of marking out key liquidity points. So if we're asking really on a weekly scale, where do I think price goes from here? Very difficult. Like I say, as long as we remain below this gap, then I think we move down to 4.027. Below that, if we continue to be bearish, then 3.780, and ultimately a kind of line in the sand low here, 3.288. We get above this gap here, however, then we have these swing highs to target. This one, which is sat around 6.807. So weekly close above this, I would chase that down. On a daily scale, then we kind of add a little bit more granularity here. If we kind of close above these gaps here, which would be a close above 4.889, then I think we move quite quickly towards 5.250. But again, show a bit of caution here because we will be within that weekly gap over here. Ultimately, while we hold these, it seems like price has got hunger for lower prices as it stands, and we overlay that fundamental side as well. And we can see how that kind of plays into the mix. Let's just close, shall we, by just taking a little look at our friend Ethereum. Let me go on a weekly, get rid of all of these. For a long old time ago. When was this? Back in 22 and 21. Right, let's just hold all these together as old data. The reason for a lot of these being very, very old on these charts, guys, is I'm mainly a perpetual trader, right? So a futures trader. So being on the spot contract charts here, we can see a lot of the old TA from positional based plays rather than my speciality these days, or certainly for the last maybe 4 or 5 years has been intraday trading. Now, ETH here on a weekly scale has done kind of what you want to see, but at the same time, if you're a bull, you don't really want to see it. We created this bearish gap, and what do we do? Exactly that. We tickled into that a little bit and then created this big bearish pin bar candle that closed last week. That is very bearish. The next low for me on a weekly scale is down at 2,111. And again, as I alluded to in my last Bitcoin report, same kind of thing here. You know, price just is a magnet for these even numbers. Yeah, we saw it on Bitcoin. We can see it here as well. You know, it is what it is. There's a psychology around it, right? People placing bids or, you know, at that number. But I really, really would be interested in that. And also the fact that that low there makes equal lows between that low and that low. Yeah. So that's really, really key for me. They don't have to be perfect. It's just the idea when these things kind of line up so much, there's so much confluence there, there's so much overlay that, you know, it just seems to me like that's something that it would make sense to be aware of. So on a weekly scale, ultimately, very difficult here to be anything other than bearish, but we want to add some more granularity to that as well and kind of take a look where we are. Now, we can see here, right, that we've actually got a lot of these lows. So there's obviously like a key pivot point here. You know, again, as we kind of move this back, we can see, you know, a good way to do this, by the way, guys, if you're struggling with support and resistance levels, is to zoom the chart in like this. Look for these key down moves, these key like V moves here, and then look for the same on the way up. So you can see we've got kind of cluster of highs here where the market was struggling to get above them. See, we've got this kind of low in here as well. And then, you know, you just want to kind of, even if you draw it in quite roughly and you say, okay, well, does that make any sense? We can see resistance here, strong close above, retest, price goes above, resistance, 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 price selling off, all right? Now we see that strong close above. This area we can see is held. This I love and will never not think of the legend SC when I say this, but deviation, what happens? Price gets above. Remember what I told you before as well. Look at the highs that are created when price comes above here and also look at the lows, yeah? So rather than jump in blind, wait for price to have that strong move above and then establish itself here, and then you can trade it higher. With this, wait for it to get below this and then trade it lower, all right? You can wait for that confirmation, obviously, depending on what time frame you're on as well. So as we kind of zoom this forward, you just want to see if it's still relevant, really. And again, these are never exact lines, right? So you can see actually makes a little bit more sense for this to be higher here. But ultimately, you can see the pivot point here. Price failed to get above here. When it got back below, it shot off and it swept liquidity below this low here. When it got back above here, we held this level, closed above it, retested it, took out liquidity here. Now we're obviously back below it. So as we kind of zoom forward and say, okay, well, we can see how perfectly, or perfect is such a nonsense term, but how well this kind of lines up here, all right? Resistance, strong close above, support, 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 big close below, right? Showing a lot of weakness. So in terms of a kind of key SR level, that's what I would be looking for. And then when we overlay the fact that it's also in the middle, pretty much of a weekly gap, we can see that. You are very, very welcome, Chris, my good friend and wonderful FA legend over at the Bird Nest. So where do we go from here? Well, on a daily scale, if we just overlay this quickly and take a look, we can see that we've got these relative equal lows below us here, which is really kind of what I'm looking for in terms of price being drawn down. We don't have any inefficiencies in here, meaning we don't have any gaps. But pretty much the last thing that price did of any significance was sweep this high, which is a high within a gap. Yeah, so we have to do that. Burned, no problem, my friend. Thank you so much for popping on. I'll see you very soon. An early indication that we might be coming for this low, if we get the close but do not already sweep that low after the close, is if we close below these up close candles. Yeah, that would be a change in delivery here. We'd be, you know, up close candles down to like an engulfing bearish candle, plus the fact that we've got this long upside wick here shows you the pressure is still very much to the downside here. So on that, you know, I'd need a daily close below there to confirm it. But ultimately, I think these equal lows down there are the draw on liquidity. What I really like about this is that we came up and we smashed those equal highs, which was our target. Okay, set those equal highs back here. I think it was 15th, yeah, 14th, 15th of August. And, you know, again, just highlighting what great liquidity pools they are. Price even wicked up into this bearish gap and then did our ultimate test, which is this was a bullish gap here. So if we expected price for continuation here, then quite simply, as we were setting this kind of price action in motion, you know, we came up. This was the market structure break. Again, watch how it traps people sometimes. Higher low, sorry, to a higher high. This would have been expected as support here, right? For price to move up, but it ultimately looks like we're about to get that 4-hour close below this, meaning that if that does, and we'll find out in an hour and 9 minutes, then I think price really is looking for liquidity then below these lows and ultimately this set of equal lows down here, okay? I think if we do close ourselves back above this, I think it would violate that, all right? The other thing that it would do, it would take these down close candles here and make them into an order block. Yeah, we've taken some form of liquidity. No, it's not from a key level, but it would be because we would also be invalidating this inversion, which should be acting as resistance. And closing above this, we would look for this to be the platform for price to push higher. Okay, so ultimately, still retaining our bearish bias over here. Really want to see the market back to some bullish conditions so we can get that lovely up-only vibe again. However, don't be put off by that. You know, in these changing and challenging market conditions, last week we had a call rate success of almost 80%. So if you come along with us, I think, you know, pretty astronomical returns. Even without leverage, I think you're looking at pretty much 10% of your portfolio. So, you know, come and learn with a crew that will teach you to trade the market both ways, right? But we'll also have your back in terms of looking at the fundamental side of the market, at the positional side of the market, where we're adding, where we're not. And obviously, you know, our wonderful in-house indicators, which range from everything from obviously the Burbicator Pro or the B Pro, which is basically an all-in trading system. We have an algo system, the MBS system, which has been running incredibly well too. All of our Discord is open, all of our profit stats are available. You see and get access to all the calls and the trades, and everything is there for you to make sure that, first of all, and most importantly to us, you're fully prepared for when these market conditions do really start to rip, but ultimately that you can still continue to make money when they don't. And we also cover traditional markets as well. All right, guys, so I'm going to call it a day there. Rattled on a little bit longer than I intended to, but just want to thank you all very much for your time and for popping onto the stream. I think we've got about, I don't know, but 3,500 people live with us today, meaning we normally get 2 or 3x watch that as well on recording. So that is really fantastic. Wishing you all a fantastic week ahead. I'm going to be live again on Wednesday. And for all you legends that are over at the Bird Nest with us, we'll be picking up our live trading sessions the same as every week tomorrow afternoon, and we are going to have a focus on the NASDAQ, the NQ contract. So if that's something you don't trade or you have an interest in trading, you can get access, you know, trade for an amazing prop desk. Like we have a TBN, our inverse prop desk as well, but also use funded firms so that you can get access to really large funded accounts, right? Meaning you're not risking your own capital, but get the chance of really, really nice payouts. So if any of that interests you, do just follow the Discord link there, come along and ask us some questions. All right. Been fantastic to have you all on there. Far too many people, I'm afraid, to say thank you to you all individually, but a big shout out to you all. Have a fantastic week ahead. Please do remember about that news as well. And I really look forward to seeing you all over at the Nest. Stevie boy, I see you sneak in there at the end, my friend. Good to see you. Have a fantastic week ahead, guys. I'll see you all on Wednesday, or hopefully a little bit sooner than that, over at the Nest.